The US dollar's dominance is one aspect of the world that Beijing despises, and China has been trying for more than a decade to diminish the currency's influence in international commerce and investment. Even if the US dollar has recently dropped, China's goal to unseat it as the primary anchor currency may not come to pass anytime soon. Welcome to Finance Professor. In today's video, we will see what China's bold move was and whether it will be the reason for the US dollar's demise. Before getting into the video though, please share and subscribe to our channel for more videos like these. Also, tap on that bell icon for notifications. Now, without any further ado, let's get into it. In the past several weeks, there have been two minor but extremely significant pieces of news that are the first signs that the dollar-centered global economic order is gradually disintegrating, raising the possibility of significantly worsening volatility. The US dollar's supremacy is one aspect of the world that Beijing despises, and for more than a decade, China has worked to reduce the currency's influence in international commerce and investment. Although the US dollar has recently dropped, China's desire to unseat it as the primary anchor currency may not come to pass anytime soon. Washington's efforts to prosecute officials from China and Hong Kong while also threatening to punish financial institutions that do business with these people, including Hong Kong Chief Executive Carrie Lam Cheng Yuan, have increased China's unease with the US dollar recently. Because the US dollar is so dominant, China has limited alternatives for retaliation, which gives the US currency its power. In the worst case scenario, the US would deny Chinese banks and enterprises access to the US dollar payment system, severely disrupting China's international trade and investment flows. As the primary international reserve currency, the US dollar enjoys what China views as an exorbitant privilege from Washington. This is especially true when the US Federal Reserve engages in monetary easing, as it has done this year to address domestic economic problems, which has had the effect of weakening the dollar. Beijing sees the US Federal Reserve's most recent monetary actions as an attempt to collect seigniorage, a type of profit produced by a currency issuer from those who use it, in order to offset the cost of its domestic troubles on other nations, notably China. Guo Shuqing, the chairman of the China Banking and Insurance Regulatory Commission, also issued a warning that the globe may experience another financial crisis as a result of the massive stimulus. Any such actions by Saudi Arabia would make headlines since it's the largest exporter of crude oil in the world and was, until recently, a key component of the US Middle East policy. As a result, Saudi Arabia and Russia, the world's two top oil exporters, wouldn't be interested in trading their crude only in the US. In an international monetary system dominated by the US dollar, the unprecedented, unlimited quantitative easing policy of the US actually consumes the creditworthiness of the dollar and erodes the foundation of global financial stability. Guo wrote in an article last weekend that appeared in the official journal Qi of China. Guo is worried because the US has given the economy trillions of dollars in stimulus to help it recover from the coronavirus problem, and more money is probably on the way. The US Federal Reserve's balance sheet increased from $4 trillion in mid-March to about $7 trillion in August as a result of its programs to purchase securities and inject cash into the financial system, known as quantitative easing. The US dollar index has fallen about 11% since its peak in late March, particularly against the euro and the recent decline in the value of the US dollar. Some strategists, including those from investment banking behemoth Goldman Sachs, have warned that the US Federal Reserve's easing and the country's sharp decline in growth may be fueling concerns about the US's fiscal and monetary policies, leading to debasement of the currency or a decline in its ability to protect the value of investments. Due to the massive quantities of the US dollar liquidity in the financial system that may eventually produce an increase in inflation once the pandemic is over, Goldman Sachs warned that this would weaken the US dollar's position as the main currency in the international foreign exchange markets. The US dollar, however, has a number of advantages over the other currencies that cannot yet be matched, according to many other analysts, and therefore its status is unlikely to alter in its foreseeable future. Before we move on any further, for more interesting content like this, make sure you subscribe to our channel Finance Professor. Hit that bell icon to receive notifications whenever a new video is posted. The argument over whether economic stimulus ultimately results in inflation has persisted since the world's financial crisis more than 10 years ago, so warnings about the end of the US dollar are nothing new. In addition, there was a worry about the US dollar due to the huge trade and budget imbalances the US was accumulating even before the coronavirus outbreak began to wreak havoc on the world. Also in addition, the US dollar index was occasionally significantly lower between 2003 and 2014 than it is today. Following the global financial crisis, China began to take steps to lessen its reliance on the US currency, with Beijing encouraging the use of the yuan in cross-border transactions. However, because the yuan is not freely convertible, it's far from being a viable alternative to the US dollar. Although China hasn't done much to promote it and few businesses actually use the asset, former central bank governor Zhu Xiaoshuan also floated the idea of using special drawing rights, an IMF accounting unit, to replace some of the functions of the US dollar. Beijing has made several attempts to replace the US dollar, but due to the inadequacies of its rivals, it will continue to play a prominent global role for some time to come. According to commentators, if the US imposes access restrictions on Chinese banks in reaction to Beijing's imposition of the national security law on Hong Kong, the sad fact for China would continue to be that there are still few cards to play. Former senior US Treasury official Mark Sobel, who now serves as the country's representative on the board of the Official Monetary and Financial Institutions Forum, a think tank with offices in London, said it is incredibly far-fetched and implausible to imagine that the US dollar would lose its status as a reserve currency. China's foreign exchange reserves were kept in US dollars to the tune of 58% as of the end of 2015. The recent decline in the value of the US dollar is actually one in a string of easily comprehensible swings, according to Barry Eichengreen, a professor of economics at the University of California in Berkeley and a former senior policy consultant to the IMF. When the coronavirus broke out across the world in March, the US dollar rose as investors sought a safe haven in US treasuries, and it began to decline after the US Federal Reserve began pumping massive amounts of liquidity into financial markets in May. There is little doubt that authorities in various nations want to reduce the dominance of the US dollar, but actual change has not yet materialized, according to James McCormick, global head of sovereign and supranational ratings at Fitch Ratings. It is possible that markets eventually take a less favorable view of US government creditworthiness, undermining the risk-free status of US Treasury bonds. But even then, the Treasury market infrastructure that investors value, its depth and liquidity, could be largely unchanged, said McCormick. While most economists concur that there is little chance the US dollar will be replaced in the short run, whether it is likely to happen in the long run depends in part on the emergence of a strong alternative, as there are presently no clear frontrunners in that race. Whether the US dollar crashes depends on how much the Trump administration further damages the US's credibility, and whether the US Federal Reserve can reduce its quantitative easing in a stable way, according to Yu Yongding, a well-known Chinese economist and former advisor to China's central bank. Only around 2% of reserves held by central banks worldwide are in yuan, with Russia holding the majority of that amount. Moscow wants Beijing to be more proactive in its challengings to Washington's hegemonic position in the global economy. And that is all for today. If you liked the video, then please give us a big thumbs up and make sure to subscribe to our channel, as well as hit that bell icon to receive notifications. Also, feel free to express your valuable thoughts in the comment section below. Thank you for joining us. Feel free to spend some time watching some other videos on our channel. But until then, goodbye.